Hi guys, Henry here. So I thought it'd be topical as the markets have gone through a bit of a correction as of 2022 to talk about what to do if your portfolio has dipped and some of the options you may have. Now, if you're like me and holding funds like Scottish Mortgage, it may have not been the best time, especially if you're like me and may have topped up in December time as part of the your top-up strategy or whatnot. So I'm seeing it in my personal portfolio. My Scottish Mortgage has dipped 20% within a month and a half. Obviously not what you want to see. So for me personally, I look at it as a long-term investment. Again, I think if you look at Baillie Gifford and their strategy, they say they're thinking decades, not quarters. The minimum that they would ideally want you to hold is 5 years. Scottish Mortgage, it is a very tech-heavy company, investing in forward-thinking companies like Delivery Hero, Moderna, as well as Tesla. Personally, I wasn't very favourable about this, but it is what it is. So what I do is, one, I'd look for the long term. Think about it as a minor blip and be confident in what you're investing in, because companies, especially funds, they'll take a 5-year time frame. They don't know what's going to happen in quarter to quarter. To be honest, no one really does know, but they take the long-term view. And you should be only really going into these kind of funds or large cap equities or that have quite a bit of volatility, such as tech companies, if you can afford to take the losses, because they are quite volatile. Also, coming back to the spectrum, it is, should I buy more? Personally, I'd probably wait a few months. I would be also considering buying more right now as well, because it's a good time. I think still there could be a bit of a way to go if you look at tech companies, because there's been that large kind of growth within the last 18 months, 24 months, that isn't just in correlation with the earnings, and they're forward looking, so if anything happens. But I was actually speaking to a client today, very intelligent banker, PhD in economics, and he thinks that tech's still the way forward, especially companies like Alphabet that are looking into different revenue streams as well into the potential future. I argue a bit against that. I think that in relation to the share price, that it may be a bit still overvalued, and yes, the companies may have an advantage going into the future, but it's still not there yet. So there's still a question of what if. And there's my personal thoughts. One is, if you have it in your portfolio, hold in there. Look more for the long term. And if you do have an opportunity, have a look at topping up sporadically throughout the year, because I think it's going to be a volatile year in 2022. Interest rates are going to rise. It's going to put in inflation. It's stayed quite a lot before. And a lot of things could happen, so use that as to your advantage of dollar cost averaging. Thanks guys. If you want any more information, it's info@investmentforexpats.com.